Hello and welcome to yet another absolutely stalwart of an episode of Smart Talks by Lincoln University of Business Management. My name is Aman Iqbal Ibrahim and I'll be your host for today's episode. Today we're venturing into the realm of digital currency, a topic that has been making waves in the global economy. Join us as we unravel the mysteries behind this revolutionary form of money and explore how it works, from the intricate blockchain technology to the practical applications that are reshaping the way we think about currency. Whether you're a seasoned crypto enthusiast or just getting started, this episode promises to be an informative journey into the fascinating world of digital currency. So, without further ado, let us step into our episode today. Digital currency, how does it work? With Mr. Yousef Al Alami, a distinguished professional with a remarkable background in finance, fintech, and the world of cryptocurrencies. With a journey spanning back to 2016, Yousef has collaborated with industrial luminaries like Alexia Hefti and Alex Shehad, as well as esteemed professors in academic settings. His career boasts an impressive list of milestones, including his early development with Deloitte as a student, contributing to the launch of Noon.com's Noon Food app, and a significant internship at UAE's pioneering regulated exchange, MidChains. Currently serving as a senior associate at Luna Media Corp since 2021, Yousef has been at the forefront of the thriving crypto scene in Dubai. In addition to his professional pursuits, Yousef is a passionate educator, regularly producing educational content for Cointelegraph MENA and sharing his insights as a guest lecturer. Moreover, he plays a pivotal role as an advisor, guiding companies and startups towards sustainable integration into the exciting realms of Web3 and cryptocurrency. So let's jump straight into the episode. Welcome. How are you feeling today?
That was a really good intro, man. Thanks for that.
Thank you.
We
aim to make sure that we feel at the top of it at the beginning of the episode.
Yeah. Well, pressure's on now for me. Yeah.
No worries.
Yeah.
All right. So let's just jump straight into it. Let's jump into the most philosophical of questions that we have today. Right. The philosophy of what is money as such.
That's an interesting question.
Mm-hmm.
Actually, the reason why it's an interesting question is because this is, as someone who's majored in finance and who's generally fascinated by finance overall, this is something that I'm that annoying friend who asks for, like, in the group setting when we're out, like, philosophical questions like, what is life? What is but I've been asking this question for years, professionally and casually. People around me. And what's interesting is that people don't necessarily have the wrong answer, but they always dance around the actual real answer, which is my opinion. And they always have different answers, slightly different answers. So what I'd like to do is invite you to try and answer that.
Wow. Okay. So what is money? I would. Okay. Yeah. I would say money would be something that any sort of either physical or non-physical token that you could use for an exchange of goods and services, or anything that just helps serve a particular need that you have.
Right.
Yeah.
I mean, again, it's not wrong, right? For most people, money is something that pays the bills. You have to work for it, you have to earn it, and then you use it to buy stuff that you want. Exactly. Whether it's a rent for a nice house, or payment on a car, or tuition for your kids. It's something that revolves around your life, but you don't really fully understand why you're putting all this effort and life into these pieces of paper or digits on a screen. And for me, money philosophically translates to some of the things that matter in our lives, right? And if you think about this stuff that we have to contribute to the world, it really is two, maybe three things. It is our time, it is our energy, and it is matter. Right, like actual stuff. True. And money could be thought as a measure of these three things, mainly energy. And this is something that industry leaders and economists also say. It's not like a new thing that I came up with. Michael Saylor being one of my favorite people in the space. The concept of energy is like, if you think about energy from a physics standpoint, I'm going to get these numbers wrong, but I'm just going to give you an example, like a thought experiment here. If you could produce energy by going on a cycle and, cycle hard for an hour and probably produce like 1 watt, and 1 watt of electricity and energy is probably worth like 5 fils. So you can't make a living off of that,
True.
Right? So you increasingly find more efficient ways of making energy, electrical energy in this case. Maybe rowing is easier for you, or maybe you pile up some wood and you boil some water and that spins a turbine instead of you having to do the cycling work, and that produces maybe 2 watts per hour, right? And then that's 10 fills per hour that you're generating. But then now we have the cheapest form, which is spending millions and probably billions on infrastructure and mining, fracking, and getting oil and coal out of the ground, burning that, and that spins turbines and creates electric energy. And that is why we're able to produce electricity for so cheap, right? Now, the relationship here between energy and effort, right? You increasingly, as humans, find ways to produce energy with less effort. And it's the same thing with money. With money, you could put in a lot of effort and a lot of time by maybe earning a couple dollars an hour. At some blue-collar job, right? Nothing wrong with that, but there's a lot of people that are millionaires, right? That they make thousands, sometimes millions of dollars per hour, right? Jeff Bezos at his peak was making something like in 2019 or 2020, when Amazon really blew up, he was making about $225 million a day, right? Imagine that.
Amazing, yeah.
And so there are people that find increasingly efficient and quicker ways of creating energy. And why could you think of money as energy? Is that you could use this, it takes energy to get it, but also when you spend it, when you're buying something like this camera equipment or the studio here, which is beautiful, by the way. This is a lot. You're giving it to someone in exchange for the effort and energy and matter that they put in to give this to you.
Yeah.
Right? And before money, we also were exchanging energy and matter and time in the form of the barter system.
Absolutely.
Right? A fisherman would trade a basket of fish for maybe 10 baskets of rice. And 10 baskets of rice is maybe worth 1 sheep. And 1 sheep is worth, you trade your way up to a hut, maybe, right? And but the thing is with the barter system is that it's really inefficient, right? If you have a hut that you want to sell and a guy who has a lot of fish that wants a hut, but you don't really want fish, right? You want a horse, maybe. And the guy has to find someone who's willing to exchange a horse for fish and so on and so forth. So then that's kind of the evolution of why we have money as it is today.
True.
There's a couple millennia that I skipped, right? We had silver coins and dollars and stuff like that and gold eventually. But now we just have mainly for the world and especially here for the UAE, we have monetary policy.
True.
Pieces of paper that is backed by the government that ensures that we have a semi-stable economy. And that, to me, is what money is. And if you think about money as energy, you start having these thought experiments like energy and time. These are finite things.
True.
But it's and we measure it with money that's not necessarily finite.
Absolutely, yeah.
Right? The circulating supply of cash in the system, there's no ceiling to that, right? A house which was worth something 10 years ago is now worth a lot more today. The house didn't change, right? But the money supply changed.
Exactly.
Right?
Absolutely.
That's how I think about money.
It's a very unique paradigm that you've presented, considering it as energy. And it makes sense. The way you describe it, it makes complete sense. There's something that if we are doing on our own accord because we need it or we want it, we need it to a certain point and then we want it after a certain point, So it makes absolute sense, and it's a very unique perspective of looking at it. And then now we know what money is. Let's look at its digital stepbrother. It's what is crypto?
And, the unwanted cousin.
The problematic
the annoying cousin. Uncle in Thanksgiving.
Yeah. So what is crypto and how does that work?
So what is crypto? For me, I want to, before everyone clicks off, right? I understand that a lot of the crypto industry and a lot of the Web3 space is very new and very volatile and very dangerous for a lot of people to come in. So I'm not going to be talking about any specific crypto. I'm going to be talking about crypto and Web3 as a form of emerging technologies. What problem is it trying to solve? But I know that people have heard buzzwords like decentralized and secure before. But I'm going to be trying to provide a new perspective here. To understand the problems that crypto is trying to solve, we have to look at first the problems that exists with our normal form of money. Now, it is important to understand that in Dubai here, or in the US, or in the UK, or any developed nation, this is a hard concept to grasp. But for the majority of the world, people don't have access to a bank account.
True.
And even in Dubai and the US, sometimes you have to have like some sort of documentation, right? You have to have a passport or maybe an ID. And in some cases, you have to have like a salary certificate for some things. And then, you're at the bank's beck and call.
True.
To some extent, right? That's not to say that, banks are evil. I'm a finance major, and, I think banks are very crucial and important. And there's no avenue in this conversation to say that crypto is better than banks.
Yeah.
But crypto does stuff that banks can't do. And that's what I'm going to say. So the problem with money, I kind of alluded to it with the example that money could be thought of as monetary energy. And energy itself is finite, and time itself is finite, and so is matter. We only have a limited of time and energy that each individual has to provide to the rest of the world around them. But money and monetary policy is not finite. Now the question is, who controls the supply of money? The answer is not one single person, at least in most developed nations. And the answer is that they'd like you to think that, and there is a whole school of governance and economics around monetary policy and why they print money at some point or bring it back in. But the issue is that somewhere around, I think, the 70s, I might get that number wrong, money used to be a measure of gold. And gold was a decent measure because gold is finite. It only increases in supply about 3% a year, right? It takes a lot of effort to mine it. And gold is valuable because we agree that it's valuable. But once we ditch the gold standard, and this was mainly to fund war efforts, right? This is not like a conspiracy. This is
Absolutely.
It was mainly to fund war efforts at the time. When they went back to, when they did that, by the way, when they ditched the gold standard in America, they actually made gold illegal to buy as an investment. You could have it for jewelry and stuff, but they made it illegal. You had to sell it back to the government at a specific price.
Then the gold rush and everything.
Then the gold rush, and then, and so what you have now is there was a kind of a sentiment back then in history where we'll go back to the gold standard, right? I mean, we don't know what to do without the gold standard. That was the gold standard, right? But now they just have monetary policy, right? They just have an average inflation rate every year. And now we have stuff like stimulus checks and stuff like that. And then we have uncontrollable inflation. And the thing is, when someone tells you that a healthy inflation is 2% a year, if you're in finance, you would understand that 2% a year inflation it could be quite detrimental. Without compounding, that means every 10 years you have an asset inflation of like 100%. Yeah. So like if you 2% a year is you add on another 50. You add another 20% on that, compound that over, that's around 50%. A house that was worth $1 million, 10 years from now, the house does not change, you'll have an asset inflation of $1.5 million. And that seems fine if you're a house investor, right? But if you are in your 20s today, it might be quite difficult to buy a house, to get a loan, right? And you don't see that necessarily that wages go up as well.
Exactly.
There's no direct relationship between inflation and monetary policy and wages. There is,
and then there's this shrinkflation as well that's happening along with that for consumerism and stuff, which altogether just
You want to say what shrinkflation is? I think it's an interesting concept.
So it's. I mean, the best example I see is I love Gatorade.
Okay.
I love drinking Gatorade.
I'm more of a Prime guy myself.
Oh, okay, yeah. when the Prime value hits the value of Doge, I'll buy Prime. but yeah, no, it's just people had noticed, and it had gone viral after a point that the bottle of Gatorade, the dimensions started changing. There was a huge indentation on the bottom of it. So basically, it's the price goes up, the quantity goes down, and they don't tell us that the quantity has gone down. So it's
Yeah.
kind of like a sneaky tactic.
Yeah.
So at the end of the day, we're paying more for less.
Exactly.
So it's a sense of shrinkflation. I mean, correct me if I'm wrong, but it's
No, you're exactly right. So sometimes shrinkflation happens where the price stays the same, but the quantity goes less as well. Where like $5 for a pack of 10-pack noodles, that was maybe a kilo, now costs $5 for 10-pack noodles, but it's now 800 grams, right? Like, So we have these problems, and the thing is, these are not there's a lot of people out there that would say that these are existential problems, right? This is going to be the end of the world, and there's a bubble and stuff like that. That's not what I'm saying at all. What I'm saying is that there is no other option. If you want to participate in the modern economy, there is no other option than to be a part of it.
Absolutely.
Right? And you have to just work around it. You could invest in gold, but even if you invest in gold, if you try to invest in gold, where would you go? Realistically, this is a practical question for you.
To invest in gold and just probably try to find some sort of forex market or something, or an online market.
Exactly.
Yeah.
And when you go to a forex market, this is another part of a centralized system. You are kind of depending on this forex app. That this forex app is not going to steal your money. Right? You don't have the gold with you, and even if you have the gold with you, if you want to invest in a lot of gold, kind of a headache to store. Yeah. But even if you want to store it, right? Store it in a vault or in a bank somewhere and insure it. Then you're paying for insurance and storage, and then you also hope that the bank is not going to get robbed. But this is like a dystopian paradigm where it's probably not going to happen. These vaults are incredibly safe, and but at the end, my point is that it's a hassle. If you want to get around the system, it's a hassle. And try to sell gold as well if you wanted to buy groceries, right? And so where crypto comes in for me is that it's not 100% solution to all these problems. It's not, but it is an alternative. It is an alternative because there's a lot of things that are more efficient when it comes to, and I will speak specifically about Bitcoin and how Bitcoin works. Is that your original question? How does cryptocurrency work?
Yeah, how does it work? Yeah, absolutely.
I'll get into a little bit of that. There was this island, I think it was like 600 years ago. It's called the island of Yap. And the island of Yap was using the barter system that we spoke about. They were trading fish for rice and so on and so forth. And this island, what they didn't have on the island was a specific stone. They didn't have gold or silver or anything like that, but they also didn't have limestone. But they got limestone from explorers and fishermen that would go out to the sea and bring them back. But because they didn't have limestone on the island itself, they saw this limestone as something sought after and valuable. But they were really, really heavy. Sometimes 1, 2, 3 ton circular limestones that they just put in the middle of the village, right? And so if someone wanted to buy the limestone, you can't put it in your house. You can't bring it in your house. Like, no one's going to carry it. But you just cared about the ownership of that limestone. And you kind of use this limestone as a form of currency. But if you can't move it, how did they trade it? Well, what they did is the owner of the limestone, which typically the first owner would be some sort of the captain of the ship or the fisherman, he would then call out the rest of the villagers, all them out of their houses, right? And he would say, I bought that hut from that guy, right? And he brings the guy with him in front of the village. He is now the new owner of this limestone. Now, the limestone's not going to move. You guys go back to your home, but we all know that he's the new owner. Yes. And now I'm the new owner of that hut, right? And so what they did is kind of agree orally, right? They reached what is called oral consensus, that the new owner of the limestone was so-and-so, right? And the only way that you could steal it, well, you can't carry it, right? Exactly. And everyone knows each other. So the only way you can steal it is convince half the village that it's yours when it's really not. But that's a really difficult task. Now, interestingly enough, this island, I don't know if I mentioned, but it's called the island of Yap, right? And the people of Yap. And these limestones were called rye stones, I think. Very interesting story. And this example of oral consensus is probably the closest example to how the blockchain actually works today. And that example was like 600 years ago, right? Amazing. And what they had was they had an oral ledger. They kept record of who the new owner was for each limestone. Now, that's how Bitcoin works. you can think of Bitcoin as these digital form of these limestones. And people are not coming out of their huts to agree on a new owner for each and every Bitcoin, but there are computers that are plugged into the blockchain, which is the network that houses all the coins. And the blockchain is basically a digital ledger where all these computers are putting their computer power in and recording every single transaction since the first transaction. And so every single computer that's connected to the blockchain, it has a record of all the transactions and all the wallets and all the balances ever. And so if you hack one computer, the rule is you just trust the majority, right? And so to really hack the Bitcoin blockchain, you need to hack at least 50% of all the computers that are connected to the blockchain. Yeah. Now, here's the interesting part. There is a reason why that's not feasible or possible, and that goes into the little gears and levers of how the Bitcoin blockchain actually works. It's not oral consensus. It's called proof of work consensus. It takes actual computing work to actually be a part of the blockchain. And if you want to know more about that, to anyone who's listening, I wrote a quite lengthy blog, but it's very easy read, right? On my LinkedIn on how Bitcoin actually works.
Perfect.
Right? But with that explanation of just very surface level of what it does, we've arrived at a way to make transactions digitally that doesn't need a middleman. It needs all these computers that are connected to it, but it doesn't need a middleman. And that's the important part.
True.
Because if I were to send you bank transfer, say I wanted to use Emirates NBD or Live or whatever it is, say you had a Sharjah Islamic bank account, and I had a Emirates NBD account, and you give me your IBAN, and I sent these banks, right? All they do is they just say, this number goes down here, and that number goes up there, and we settle in cash at the end of the day.
Exactly.
Now, the issue is that what if a bank blocks your transaction?
Sure.
Or what if the bank, it's a weekend and you wanted to send a payment permanently and you don't want to wait 2 business days for this payment to go through? Or you wanted to send some money across borders, right? It takes a lot of time. And if you want to send $5 across the border, you'll end up paying like $20 in fees, and that will take like 5 business days sometimes. Now, here's the issue. With small amounts of money, it's not that big of an issue. You can go to an exchange or something. But the moment that you want to change, you will see the issue kind of change and form. The money and the infrastructure shouldn't change. But banks will start asking a lot of questions once you want to send $40 million or $500 million. Who are you sending this to? Where'd you get this money from?
Why are you sending it?
Yeah, we don't really have the balance right now in our accounts for us to send $500 million in one shot. With Bitcoin, you could send any amount of money you want to anyone in the world within minutes.
True.
And it will cost you a few dollars. It's not a free transaction, right? That technological revolution, right? And it doesn't need a company to do it, right? That, for me, back in 2016, when my first reaction to Bitcoin was like, what is this internet scam thing going on that's closely tied to money laundering and stuff?
Absolutely.
When I dug into Bitcoin a lot more, and I dug into the infrastructure of finance and how it works and how Bitcoin is really different from the rest, that was the thing that fascinated me the most. That it was.
Absolutely. It's just fascinating how, like you said, change is not always a welcome thing. So, for example, when people wanted to switch from the gold standard to something else, the end of the day, we're back at the gold standard. So I believe we're at that state with cryptocurrencies now. So eventually, yes, it's going to be a preferred alternative to normal paper currency. But right now, I think we're at this state where people are trying to find another gold standard other than cryptocurrency because, like I said, they feel like it's tied to money laundering and it's tied to these things. Yeah. Which brings us to the question of what the downsides are of the cryptocurrency industry as such. about scams, tradings. I've been caught. I've been scammed. People I know have been scammed. So, what would you say are certain things that should stand out as red flags to us when we're trying to get into that field?
Right. This is a very interesting question, and I've fallen for some scams myself as well. And that's one of the downsides of the space, is that because it's so new, because not many people really understand it and how it works. A lot of people actually think that when they buy Bitcoin on an exchange, let's say like Binance or Coinbase for now, then they've bought Bitcoin. But it's like when you buy gold on a Forex, right? You haven't really bought gold. The Forex exchange or a company is holding it for you, and they'll say, like, if you sell it, we'll send you the money back, right? And that's kind of how a crypto exchange works. And that's exactly how it works. Okay. You give them money, and they'll hold the cryptocurrency for you until you decide to withdraw it.
Yeah.
And up until the point where you withdraw it, it's in their books. It's in their storage, sorry. Now, when you give a company with employees and a CEO and all these things money to do a service for you or to hold a crypto for you, you're also going back to the centralized problem, which is you're trusting that that company keeps your cryptocurrency for you, right? And they don't do anything with it, or they don't lose it. That happens a lot. It happened a few weeks ago. There was an exchange in Turkey. I think it was called Thodex. I think it was like a lot of people lost their money, and the exchange went down. FTX is a famous example.
Oh, yes.
Yeah. And the issue with these companies is that they act a lot like banks. But if you try to set up a bank, you will very quickly run into a huge wall of red tape. There are so many regulations and so many licenses and so many bureaucratic stuff that you have to set up to actually legally be allowed to accept people's money, right? Which don't necessarily apply to crypto exchanges, which act like banks.
True.
Now, these crypto exchanges are not crypto necessarily, right? Coinbase doesn't have a coin. They're just an exchange. And Coinbase is fairly regulated. But the issue is that we don't have a way to regulate these crypto companies and crypto exchanges. I mean, if I ask you, what is crypto? Like, is it an asset? Is it property? Is it commodity? Is it security? Bitcoin is probably a commodity, right? Because there's no Bitcoin CEO, there's no Bitcoin employees. It's just a thing that's there, and it goes up and down in value. But Bitcoin itself stays the same, right? Ethereum, you could kind of argue about it. And the rest of them are probably majority securities, but then you can't really treat them as securities because not all of them have the characteristics of like a license and all these things. And also, the second that you go into the regulating cryptocurrencies, you go back to the centralized problem, right? A lot of the scams come from a few places. For example, in the case like FTX and these companies that are just they're just taking people's funds and mismanaging them. This is a centralized problem. Similar to what we had in 2008 with the banks. They took a lot of people's money and they were mismanaging it, right? And there's another thing where people don't really know how to look out for these centralized problems because they're not visible. They're not understood. It is different to hold Bitcoin in a USB rather on your Binance account. Absolutely. There's a huge difference. Nobody can get into that USB. Now, and then there's also like safety procedures, like when you have it in USB or a digital wallet, you have a password, and this password is called your secret or private key. If you store the secret or private key in like your email or something, your email is very easily hacked into.
Yeah, absolutely.
Or your phone, it's not easily hacked into, but it could be hacked into. The safest way, technically, this absolute safest way to hold it is to memorize it.
Yeah.
But if you can't memorize it, write it down on a piece of paper, split that piece of paper into four, and store it into 4 different places. Yeah. That's what I do, right? But I know someone who's kept it in their email and lost millions. Just like that.
You've pretty much signed up for it.
Yeah.
If you put the password, it's 16 codes and everything. It's just you're kind of like signing up for it if you put it in your email, though.
The difference is like if you invest in gold through Forex, right? And it's like a dodgy Forex app, right? And then that Forex app goes down, your money's gone.
Yeah.
But if you invest in gold and you withdraw it, or you just buy a gold bar from a store and then you just keep it in a vault somewhere in your house, the only way someone could really take that is if they break into your house and take it, which is probably a lot harder than hacking to some account.
Exactly.
Right? And that's kind of where a lot of the scams happen in crypto. It's centralized problems, right? Even not necessarily exchanges, but even some cryptocurrencies out there, they're not actually fully decentralized. Majority of crypto, and this is a controversial statement, but the majority of crypto is not actually decentralized. Wow. And there is like a huge rabbit hole that you can get into, like liquidity pools and protocols and DeFi and all these things. But to just come back to it, a lot of the scams and a lot of the fraud that happens comes from centralized points of failure. And there are companies out there that actually look for centralized points of failure, like Certic. They're kind of auditors, and they score, the security for different.
So you would suggest that before someone invests, they go through these kind of like audit companies and just see their ratings. I mean, not just that point alone, but consider that as one of the factors before thinking about investing in a certain type of crypto as such.
Yeah, I would say if someone is really interested in the idea of cryptocurrency and the idea of investing in cryptocurrency, there's a lot of this is another scam that happens, which is a lot of people would say like, oh, make a quick buck doing this or make a quick buck. There's no cheat code in making money. If you want to invest in something, the rule of thumb is understand what value it brings to the world, and see if that value will carry forward in the future. For me, that's Bitcoin.
Yep.
Right? And I'm not saying buy Bitcoin or anything like that, but Bitcoin is not a security. It's different than if someone says buy Tesla or buy, because those are securities. But for me, it took a very long time for me to understand Bitcoin. It took me years, and it's fine. If you want to invest something, let go of the fantasy that you're going to turn $100 into $10,000 overnight.
Absolutely.
It doesn't happen. There are headlines of it happening, and trading is a real practice, but it's a full-time job. I know traders, right? And you might talk to peers with you in university that might be interested in this course, or they might know a friend that's turned $1,000 into $100K, and it's not those people that sell the courses usually make no money not by the trading, but by selling the course.
Absolutely.
And they do some fishy things by doing back trades, like looking back and saying, "Oh, I actually bought it there and sold it there," when they didn't. Yeah. And you could go back and check these things, but if you want to invest, let go of the fantasy that you're going to get rich.
Absolutely.
And just try to invest stuff that you're excited about. And sometimes that's nothing. Finance can be boring to a lot of people, but if something is exciting, it could be something as dumb as collectibles, like a watch or a shoe, or if it's something that you understand and the rest of the world wants it and it provides value to the rest of the world, whether it's a piece of art, whether it's a house or anything like that, get excited about it first, and that's what you choose to invest in. For me, that was cryptocurrencies. Right.
Absolutely. And just as you said, collectibles. We've got like two more questions, and then it's just when you said about collectibles, what came to my head immediately was NFTs and the non-fungible token aspect of the crypto world. Yeah. So a quick word about what NFTs are exactly.
So NFT. Okay, so I'll break this down super quick. Right. NFT stands for non-fungible tokens. Fungible is an economic term that basically means something that is replicable and you can split up into smaller pieces. Perfect example is cash. 100 dirhams equals another 100 dirhams. So it's replicable. But it's also, you can split it up into smaller pieces. 100 dirhams is equal to 250s. So if I came to you and I said which one's more valuable, you'd be like, what the that's weird, right? That's a weird question. But it's the same thing with stuff that you can find at a grocery. 2 Cokes, same. Pour into 2 glasses. Those 2 glasses are the same, right? So that's something that's fungible. Now, non-fungible is just something that's unique, not replicable and not divisible. When I say not replicable, I mean you can't replicate the value. So you could replicate the Mona Lisa, and it would be a very good replica, or this watch, right? And it would be a very good replica, but it won't be the same as the original.
Absolutely.
You can't split it up into smaller pieces. Like say the Mona Lisa is worth $500 million. I can't split it in half and be like, hey, this is worth 250 mil. So with tokens, Bitcoin is a fungible token, right? And one Bitcoin is equal to another. You can also split Bitcoin to one Bitcoin. You can split it into 100 million pieces, right? One dirham, you can split it into 100 pieces in fills. In Bitcoin, you can split it into 100 million smaller pieces called Satoshis. And so that's an example of a fungible token. Now, a non-fungible token is someone who's coming in and saying, I'll build a token that's just a one, right? And you can't replicate it. You can't replicate the code, what's called a smart contract.
Yeah.
And you can't split it up into smaller pieces. The blockchain is something that you can't go back and change an old transaction. That's what we say is immutable, right? And so what people have started doing is with these non-fungible tokens, these NFTs, these one-of-one tokens or one of 10,000 tokens, they've started saying that whoever owns this NFT, they just declare it to the world, right? Whoever owns this NFT owns this T-shirt, is now the new owner of T-shirt. So what they started doing is they started using these NFTs as digital certificates of ownership of things. The thing is, where we're seeing NFTs is we're seeing NFTs as being digital certificates of ownership for digital things, like digital art. And digital art has, even you could say today, has struggled to be collectible like real art. But they've always been appreciated. And the thing is with NFTs is that when it comes to the digital space, I'll play devil's advocate. I don't trade or buy NFTs, just so you know, right? But I have at some point. I played around with it. But with NFTs, people struggle to find the rationale of buying digital art. But then I say, it's like, okay, what's the rationale of buying real art, right? There's like blank canvases out there with a line going through it selling for tens of thousands of dollars, right? Is it worth something because it's real, or is it just worth something because someone's willing to pay for it? Exactly. And the thing is, with the digital space as well, if you think about the most successful gaming companies on the planet, their games are for free. Fortnite, CSGO is not free, but they make most of their money. Clash of Clans as well. All these free games, they make most of their money, over 90% of their money, not from the in-app, like the game purchase, but the in-app purchases. And the in-app purchases are just pieces of digital art. What NFTs are doing is just taking digital collectibles out of the scope of specific ecosystems like NFTs and Fortnite and stuff like that.
Yeah, that's very well put. And we're just going to wrap it up with one main question. In your head, what is crypto and the UAE? That's it. Yeah.
So going back to the original challenge that we don't know how to regulate, these crypto companies. The UAE and Dubai, and I was born and raised here, and it's a very proud moment for me, especially in the past couple of years. The UAE and Dubai specifically have been at the forefront globally when it comes to regulating companies in the Web3 space. So you have the Virtual Asset Regulatory Authority, VARA, right? They've been out and active in regulating certain companies, like Binance is here, Coinbase is setting up over here. A lot of these big companies are setting up over here, and they're doing it in a very regulated way. Whereas in the US, you have to go through loopholes and stuff like that, like FTX was did in the Bahamas, and So the UAE right now, a lot of the companies and a lot of the money for crypto is coming to Dubai. And you can see that in conferences, in person. When you go to a conference like GITEX or Future Blockchain Summit that's been going on since 2017, I've been going every year. CZ was there in 2021, I want to say, who's the CEO and founder of Binance. These people and these leaders are coming here to Dubai to set up shop, essentially. So it's a great opportunity for students and for the world if this is something that interests you. This is a growing space. You know, the price of Bitcoin and the market cap and all these things, they go up and down, but the value does not change.
Absolutely.
Right?
So Dubai is going to be one of the places to be when it comes to crypto, NFT, and the blockchain world, metaverse, everything coming in together at the end of the day.
Absolutely. Yeah.
Perfect. In a globalized world, money talks. And in a world that is growing more digital and paperless by the second, a knowledge of cryptocurrency is essential for all. Thank you so much for your time, Yousef. It was immensely insightful. And to our listeners, if you have any questions, please feel free to reach out to us, and we will liaise with you. Feel free to reach out to us on LUBM Middle East on Instagram, Facebook, and LinkedIn. And until next time, I've been Amanik Bal Ibrahim. Keep smart with Smart Talks by Lincoln University of Business Management. Thank you, and have a great day ahead.